Cast is now starting. All attendees are in listen-only mode.
Hi traders, welcome to the live webinar with Admiral Markets. My name is Chris. We'll be taking a look at combining Fibonacci fractals and moving averages for trading. All of this is, Fibonacci is very important for all of them because the market is fractal of nature and Fibonacci is a level that is repetitive in those fractals. So we'll be diving into all of this with real live charts in just a second. First of all, two disclaimers to mention. First is the fact that this webinar is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out if this webinar is suitable for you. And secondly, please note that trading for exchange at global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risks involved when trading. Good, so thank you for your attention on those two disclaimers. We are going to start with looking at the charts in just a second. Just wanted to give you a little bit of an introduction and welcome to admiralmarkets.com, the website here. You can find a lot of info, so take your time after the webinar to browse through it, maybe get to know Admiral Markets a little bit better, about us. You can find options about how to trade, starting an account, etc. The instruments that you can trade, the software through platforms, analytics that Nennet and I are partly taking care of, and education. All right, so a lot of good stuff here. Don't forget to take a look afterwards. With regard to the markets, let's take a look right now. Alrighty, so excuse me, euro dollar. I don't know if you listened to perhaps my video yesterday that discusses the euro dollar, pound dollar, dollar yen, but I was indicating that at 123 it is a likely bouncing spot because there was a fib target. There's an R1 weekly pivot point. I'll show you which fib target I had in mind at that time, which was I believe from, not sure, but I think from here to here. Yes, indeed. So you can see that we can use fibs in different ways. As retracements, it was very useful. Remember when it was reaching the 38.50 fib zone in here, right? I should use blue for that. So that was a key decisive zone, right? Price was either going to bounce or break. I don't know if you remember us talking about that, but that was definitely an important zone. And if price bounced and then broke this trend line, there could be, a pretty strong bullish continuation. That did happen indeed. Got a good upside to 123. And as you can see, there was a good confluence at 123. That's why I referred to yesterday that this could be a spot where price makes a retracement. But due to the strong momentum, the lack of divergence, and the clear breakout to the upside, I think that still the same analysis is valid as yesterday, that as price retraces, that these retracement levels could act as bounce and support levels and for continuations further up. So 23.6 is the first of them. The second could be 38. We're not going to be using this fib anymore, so let me remove that. I just wanted to show you how that target was neatly respected, the minus 61.8. And ultimately, the very deepest retracement I would expect is the top, the broken top, and the weekly pivot point and the 50 fib. Not sure if it will get there. It seems not that likely at this moment, but if it were, it would still be, if it were to retrace that deeply, it would still be a bouncing spot. So, but I think 23.6 or the 38.2 fib are a little bit more likely. So let's zoom in a little bit. So how many candles we gotta, I'll be taking a look at various patterns. One of them is time patterns, and you can see 6 candles not breaking this high. So I wouldn't be surprised if price makes some kind of flag here, first of all right? But let's see on the hourly chart. I think this could be a bouncing spot, but because of the 4-hour world that looks ready more. I think that it's okay to, if we get a good 4 hour candle here, I don't think it's a bad idea to take a long position. Um, but with regard to the stop loss, it's a little bit of a more difficult aspect. Probably the better stop loss is at 120.65. That's pretty deep, I know. That's pretty far, and but the target could be 125. So it is still almost a 2-to-1 trade. I think it could be better if price, I mean, if it goes deeper to 38.2 fib, stop loss only gets smaller and target gets bigger, right? So it becomes even more appealing from a reward to risk ratio, but we're never sure that it gets there. So that that depends. Like from a time pattern, I would expect a little bit more correction first. So I will probably rather still wait till tomorrow before considering your dollar longs. But if I would, let's say hypothetically, if I would be very interested in trading it here, I mean, a bullish candlestick pattern could be something, could be already a confirmation. I think I will be a little bit more patient with this one myself in this case and see how price responds in this zone. I think there will be some consolidation first that could go maybe to 38, and then the breakout of that flag to the upside could be an interesting breakout trade. All right, I'm just analyzing a few time frames to see if I missed anything that might be worth reviewing. Don't forget, this is a very good breakout candle on the weekly chart. I think that's about it for the moment. I mean, if tomorrow, by any chance, price is up here, makes an upside, and is making a bull flag like this, I would draw a channel like that, and I wouldn't have necessarily anything against the breakout trade, right? If there's some clear kind of push up and a correction, so that is something that's my kind of my backup plan. If price were not to retrace deeper. On the other hand, if it flies up like this, but then moves down pretty quickly and up, then it's starting to look more like a pattern, and still need to wait for the breakout, basically. All right, target I think 124, but ultimately 125 round level. All right, so that's my view on euro dollar. If you have any questions, of course, feel free to ask through the chat, and I'll take a look at that. Pound dollar, kind of the same thing. It is at support. I just know that the pound dollar is at a strong resistance level in the sense this bottom, and it's right out there. So and it's at the long-term moving average. So from this point of view, I think that pound dollar is facing a little bit, well, maybe not a little bit, but some heftier resistance zone. And I'm not sure how price is going to respond to that. For the moment, nothing serious, but price is also moving down just like the euro dollar. It's just that if price breaks to the upside, I like the euro dollar a little bit more than the pound dollar because of that massive zone. I mean, price could break through that important, resistance level. I wouldn't be surprised necessarily. It's just that the odds of the euro dollar look a little bit better. Ultimately, price is also very strong upside and mild correction. So it will probably follow the euro dollar. It might just be slower and choppier, I would think. So, but we can take a look at the euro pound if that analysis adds up. That the euro looks a little bit stronger than the pound. All right, let's do that. Well, ultimately, euro pound is in a range at this point. Halfway, because in the sense halfway the range, because if you look at these resistances and these bottoms, we have some higher highs and higher lows though within that range. So we can't really get much info from this euro pound daily chart, to be honest. But weekly chart, has been an uptrend though. That's true. And for our chart, as I said, probably slightly an uptrend, although very slow and very choppy. Really can't read too much into this, I think, because it's just halfway range. But all right, so let's skip that one for the moment. Dollar yen. Let me take a look at the low. It reached 110.33. So that was a pretty good breakout from 112.10 to 133. Good fall, and it is getting pretty close to the 61.8 fib and S1 when drawing from here to here, which in my view could be already a bouncing spot. You can see price stopping at the 38, stopping at the 50, stopping at the 23.6 fib. So there's again a chance that price could respect that level. It is 110 is a round level, is a psychological round level too. So there are a lot of factors here that come into play, and price was within 17 pips of that level. So it could still make that dip to tag that more exactly. It might not. So that's a little bit difficult to. It would be interesting if it hit this level because that could be a bouncing spot for upside. Maybe on the hourly chart, could keep an eye on this trend line. If it breaks, there could be a small little breakout, one more little breakout to hit that S1. I would think that that would approximately create double divergence on the hourly chart, which I think should lead to a little bit of a rally, maybe at least to the weekly pivot point, if not more, who knows, a little bit of a bounce there. Now, if it doesn't break that trend line, and this break could be very slow and could be quite choppy, you got to be careful of that. If it were to break this resistance trend line, and this one, there could be also a breakout to the upside, right? Just thinking if that is interesting. Let me use a different template very quickly. I need to check something. 1 second. It could be okay, I think. This upside break. It's a counter trend reversal. Just checking some indicators there. But I think that if it does break, it would need to be a solid 4-hour candle. A solid 4-hour candle would mean a close below, a close above 111, a 4-hour candle that has maybe probably 50 pips in size, I would say. And, in this current candle, that would mean price with a high at least at 111.14 up in here. Anything smaller would be dubious, I think, for a break to the upside. So I gotta see some volatility in that candle. That's my point. Otherwise, I don't think it's a likely reversal. That the chance of a reversal is just not so likely, in my 2 cents. All right, so I think what we got here, the space here is potential breakout, reversal breakout if we get a good volatility candle. break to the downside could be choppy and slow until price hits that 110. 110 could be an interesting reversal level because of multiple confluence of support. So that's my quick take on dollar yen, or summary, I should say, maybe. So Aussie is acting weird in a way because you got this massive divergence already, going on for a long time, but price still moving up higher and higher. So, it's a little bit funny pair at this moment. Its rise is quite strong, stronger than I expected. I mean, I thought it would stop somewhere in here around 77.50. It's went a lot further than that. Um, Maybe let's take a step back and just analyze the monthly for a second. Monthly is really still looking more like, or weekly. We can zoom in, of course, quickly. Is still looking more like a flag or channel, but it's been a lengthy one, hasn't it? And price recently bounced at this support. Now it's going close to these tops. It would be difficult for me to imagine that price will break through that top in one go, in one move without any retracement. So now, maybe even more than ever, I think that it's not that interesting. It's relatively close to the zone, and I think that it should create. There should be some type of pullback in my estimate. But how to trade it? I'm not a big fan of reversals, but probably best to wait for a daily bearish candle, either a strong bearish candlestick pattern on the daily chart. So, for instance, I don't know, today or tomorrow, if this not like a candle like this, not a small candle like this, but let's say if today or tomorrow or the day after, right, uh, there's a candle that pops up like this with a big wick like that, and there's a big pin bar like that. Well, that's an interesting reversal candlestick pattern, bearish reversal candlestick pattern, such as this pin bar, that could be interesting to trade for a downside. Target stop loss above that candle high. Target maybe 38 is conservative. 50 also should be okay, I guess. Of course, depends where that candle is. Obviously, if the candle is higher, we would drag it to that candle high, right? And those could be the targets for downside. So still more geared towards catching a downside, but waiting for that confirmation. I'm not sure if the Kiwi is the same. Let's take a look. New Zealand dollar is a little bit different. With the Aussie, we have a slight angle to the upside. With the Kiwi, we had it, but now we went flat. Or not we, but this currency pair. And but it's getting up and closer to the top of that range too. All right. Dollar CAD. Still a bit skeptical of this downside because I think that there's still a substantial chance that this could be an ABC like this. Yeah, I just don't have much confidence in I don't think it's a high probability either way at this moment. But if it breaks this bottom, I will reanalyze it and we'll be thinking maybe, I don't know for sure, but At this moment, it doesn't seem likely that the bottom will break. If it breaks that bottom, I will reanalyze it. I'm not even sure if I would trade anything, but if it uh, if it does break to the upside, though, there are a lot of fractals here on the hourly chart. So if there's a breakout there, I might consider upside, though. That, as I said, I think that my analysis is more favoring slightly this upside. And if it does break these fractals like this, flag, continue, there's more space to the upside. We can use fibs then in that case. Put the fib on this swing high, swing low by grabbing this bottom, grabbing this top, 78.6 fib hit, or maybe it will go deeper, maybe it'll bounce at the 88.6. And the target could be the minus 272 target. Well, the top and the minus 272 target. But let's move on. So that's my view there. Let's take a look. Euro yen. Euro yen is a little bit tricky spot because it had a breakout. It had a wide range break with a very steep pullback and then a very steep bounce. So it's almost like it seems dizzy at this moment, and it's really like not sure which direction it wants to go to. Or that's my take on it at least. And because it seems like it's on the one hand it is caught at the 78.6 fib, right, or 88, and on the other hand it is bouncing at these moving averages. So it seems like that's just a couple of those things where prices, as I just mentioned, other reasons why it's caught in two worlds really. So ultimately, probably looking at it a little bit more bullish, but that has more to do with the euro dollar that I think is in a pause before continuing higher. I do also think that the dollar yen is reaching a support, which means that the dollar yen will turn back up again. I think there's a decent chance for that. So if those two factors come into play, then there's a good chance that price might bounce at support, either at these moving averages here, anywhere here, right? So from that point of view, these fib bounce could be just a bounce, and that's it, right? And these fibs could provide a bounce and continuation. So, but yeah, it is. Let me count. One, two. I need to check something in a different template. Okay, so I think there we have two scenarios probably for your yen upside, I would say. One could be price makes a little bit deeper. I think the 50 is a bouncing spot potential. That could be one way. Or price breaks. That's the second. Price breaks, pull back, and third, continuation. So bounce to 50, the breakout itself or the pullback continuation could be ideas for trade setups here, I think. Oh, wait, I was looking at the hourly chart, not the 4 hour. 1 second. Let's take a look at the 4 hour. Hmm. 4 hour chart, I would like to see it a little bit deeper at the 50 fib probably. I think it's it's still slight advantage for bullish. I'm just analyzing how would be the best way to tackle it. Yeah, I think for the moment I'm leaning towards waiting for some kind of correction here, or a little bit deeper move first on the 4-hour chart. Let's see if there's anything else that could be interesting. Yeah, I think that actually Euro odd, Euro New Zealand, pound odd, pound New Zealand might have better papers than other pairs we've seen so far. I think so far the euro dollar looks the best. The first one was the best in my view so far. Um, I think that was the most clear structure at this point, and the others don't look the same. Have the same kind of probability in my view so far. But I think the euro odd, euro New Zealand, pound odd, pound New Zealand do have potential. I think it makes sense to analyze them. Until now, though, euro odd definitely the winner. I think at this point, but euro odd is interesting because it did break this falling wedge, which was a bullish reversal chart pattern, and with good momentum. And the 1-hour chart is building a correction. All right, so good flag here, good pattern. Yeah, I think that this one is looking pretty ready for breakout. I think the breakout is the best solution. I would not necessarily trade a bounce. I think a push through this trend line with a close above it could indicate the breakout, and could use the fib still for targets, basically 155, 155 probably, and 156.20 and 157.20 or 50 could be levels to think about. Let me put on my whisk tool to see how far this breakout might go. Let's put it to the let's use this bottom for a moment. Yeah, the best space is between 155 and 157. That could be a good breakout space there if it gets that far, of course. But that would be when I think that price will probably accelerate. So I like this euro odd. Let me see if the euro New Zealand is similar. It is at the long-term moving average, just like euro odd. Euro odd kind of broke above it, which makes it a little bit more appealing. But the euro New Zealand is roughly the same. Bullish momentum, flag, breakout should see a continuation of that momentum. And we had a good bounce at the long-term moving average. So one more leg up, I think, looking good. Let me see if pound odd has the same. More or less, yes. Pound New Zealand as well. Let's take a quick look at odd New Zealand. Odd is winning at this moment versus New Zealand. So on the 4-hour chart at least. Let me check something. Daily chart. All right, 50 fib bounce. It does look a little bit more bullish at this moment. 50-pip bounce. This downside is very corrective. So, okay, so with that in mind, more space to the upside. And that means that if euro and pound would continue with their strength versus odd in New Zealand, that New Zealand is looking a little bit weaker at this moment versus the Aussie slightly. It's small difference. So Euro New Zealand or pound New Zealand could look a bit better. Then let's take a look one more time at this euro pound. Once again, euro slightly looking better, but it's so marginal. So maybe euro New Zealand then. I mean, if I'm looking at the euro pound and now New Zealand, so euro dollar, euro New Zealand probably, but with keeping an eye on the other euro odd, for instance, right, could also be an interesting alternative too, depending on the breakout candles and how these crosses behave. So I guess probably euro continuation of this euro strength looking interesting, I would say. Let's take a look at pound yen. It's a little bit messy for me. Okay, let's take a look at gold. I'm not sure if Angel is in the webinar today. Not today. Okay, doesn't matter. But maybe look at the recording. So let's take a look at gold. Let's see. Yeah, gold made it up to that resistance spot. So I think it's the same story. Still in a bullish in the bearish environment as it hits this resistance. There's the Admiral Keltner channel. Top of that, which I think will help with resistance. There's the trend line. There's the previous stops. So a bounce here, I think, is still more likely but how far this price will fall, I don't know. But I think more likely to bounce at 1170 probably, 78.6 fib. And then I would expect a big upside. So just for those that don't know it, I'm looking for this basically, this correction, and then a bullish breakout like that. But if we don't get this bearish leg, then and we do get a breakout, then okay, then the market is showing its willingness to continue higher. S&P 500 is a rocket that is just never ending, and the last 2 weeks have been again very massively bullish. Impressive rally, and so far no end in sight. Obviously, when you look at the candlestick patterns, we're getting a little bit of a retracement at this moment, but it's not too surprising after such a move up. Let's look at some other instruments very quickly. I know that time is precious, so let's take a look at oil. Is really, further than I had expected because of this resistance zone. It's pushing through that. I don't have any trade ideas on that for the moment. I'm just analyzing what's going on. Let's see. Dow Jones is falling to wrong button there. Let's take a look at some of these crosses. EuroCAD stuck in between resistance and these moving averages. Excuse me. Let's see. Let me take a look at odd yen and New Zealand yen. I'm looking kind of curious how those went. Yeah, odd yen did make a little bit upside here, but it's moving down. It seems to be caught too between these fibs and the moving averages. Moving averages are bullish, but price is pretty slow. I was thinking about upside, but I just really wasn't that interested because of that slow kind of choppy kind of price action that these pairs have, and it seemed okay, but I rather waited for the moment. By the way, from a swing trade point of view, this week I haven't seen anything very clearly. Last week I saw better setups than till now, but that could change, of course. Just still keeping an eye on it. Last week we traded pound yen, pound odd, CAD yen. Let's see, or more. Dollar CAD, pound CAD, and a few more. I forgot. Those are the ones top of my head. All right, quick look at, maybe some of you are trading CFDs, so let's take a quick look. Big gap. Wow. Amazon just no stopping it. Look at that. Christmas holiday consolidation here, but ever since then, pretty good upside there. And Facebook looking a little bit different. It had upside, but strong fall too. Tesla as well. Let's see. Probably put, this is, sorry, let me show it a little bit bigger here. Let me put a fib to here first. All right. Riding along this 21 EMA, basically, pretty neatly for all those weeks. Quite fascinating. I mean, if it would make a retracement to 23 or 38.2 fib, could still be good bouncing spots. It's really difficult to tell how far these indices and see if these can keep pushing. But yeah, the trend is obviously up, and I'm sure that at one point there will be a bigger retracement going on, but who knows when. So these levels are still dips probably. Any questions with regard to any pair you would like to maybe take a look at? Let me know. Otherwise, just wanted to add a few minutes about fibs, fractals, moving averages. So basically fibs, I use retracements and targets, as you notice, right? And I use moving averages that are based on Fibonacci levels, and I use fractals that are based on Fibonacci levels. So, you know, the fib is the combining factor in all of these tools, and use them for different patterns in different ways. But Fibonacci, as you can see, very important concept in my trading at least, and I use it for not only the retracement and fib targets, but I use it for Wiz, which shows me the Fibonacci levels. And as I said, the fractal numbers are based on that, and moving averages are based on fib levels. And let me think here if there's anything else. Well, wave patterns, of course, go hand in hand with fibs in general. Wave patterns are also indicating which fib levels are most likely to be used. I have a feeling I'm missing something, but you know, fibs obviously a very intrinsic, important part of analyzing. And So that's why I wanted to make a special in January using these three as a combination. All right. So um, by using them, I think that let's take a look at something new. Maybe I don't know which one. I don't think we looked at pound cat, and then we'll take a look at the Aussie or Aussie. Well, maybe why not the Aussie then right away? Take a look again. Let's see. There we go. Alrighty. So these moving averages indicate flow. I mean, the 21 EMA is like the trend indicator, short term, current kind of trend. Long term is slower to react, obviously, and you can see that when price is below the 21 EMA or above it, there's a good chance of follow through. Not always, as you can see here at this spot right here, price falls below the 21 EMA, but then breaks above it again, then breaks above it. So there's a little bit of a range at this spot, but generally speaking, gives a pretty good accurate information. Also, the 144, pretty solid, like alert, long-term kind of in the middle level, right? It's a little bit late, so I wouldn't necessarily wait for taking any trade along with it. It's kind of like an extra confirmation if price breaks or bounces at it. Here it bounces, right? Here it bounces, here it breaks, here it bounces, here it breaks, here it breaks, here it bounces, right? Here it bounces, bounces, breaks, bounces, bounces, breaks, bounces, breaks. Well, you get the point, right? So it's an interesting zone to know about. The 21 EMA is the actual current direction. So, and these levels are based on Fibonacci levels. Then, of course, when all right, I just somehow deleted my Aussie. Huh, strange. Weird. My view. Sorry about this. My view suddenly changed. Ah, no, it didn't. Sorry, I'm just confused. Sorry. Sorry. All right. So we're back. What was I saying? So those are moving averages. Fractals are very useful because they indicate supportive resistance levels, key supportive resistance levels, but also my particular fractals give extra information. So for instance, let's just scroll to the current levels. So for instance, here we have a fractal above those moving averages. That's indicating uptrend. We have a green fractal, diamond fractal, that's indicating uptrend too. And you can see that we had the same here, and we had a nice continuation. Here we had a key fractal, circle, dark circle, so that's indicating key bouncing spot, for instance. All right. Lighter fractal colors are saying, okay, watch out. The uptrend might be a little bit in danger, and it was, right? So these fractals are based on the number of candles that don't break for a higher high, and as you might guess, those numbers are based on Fibonacci, right? So, but we don't have to think about that because the indicator provides, does that automatically, right? And last but not least, obviously fib levels. So, and retracements and targets. So, for instance, if we see price breaking here through support like this, what kind of targets could we have in mind? Well, we could put a fib from here to here, right? And we see a 38.2 fib bounce. So 272 target, look at that. Pretty neat. Minus 61.8 target, also used as targets. So we know where roughly price might be headed to. All right. So if you're interested, fibs, of course, are part of MT4. Moving averages are part of MT4, but I do use a special MT moving average. So if you're interested in that, do feel free to reach out. And if you're interested in these fractals, the same thing. All right, there you go. That email address. With regard to what could happen with the Aussie now, I think it's getting into just a quick summary again. Here's a resistance zone, and I think that, excuse me, that price has been away from these moving averages for quite a while. So if anything, it might still go a little bit higher, but I'm looking for candlestick patterns, bearish candlestick patterns on the daily chart for price to move back into those moving averages. So that's my current analysis and thought. I'm not sure if it will do that right here. It might move a little bit higher, but I'm looking for a bearish candlestick pattern. A pin bar, for instance, would be good. Or if there are perhaps even two bearish candles next to each other like this, that could also be an indication of further downside. So I'm still looking for a bearish reversal at this point. All right. Let's see, 1 second. Let me show you or copy quickly here, there we go, the email address, just in case you're interested. Other good tools, obviously, from the Supreme Edition. Look at the breakout here with the Keltner, for instance, indicating a great move up. Here, a bounce. Very useful tools, and this pivot point mini terminal, and that is something you can find on admiralmarkets.com. Just go to platforms, go to MetaTrader Supreme Edition, and you'll be able to download that plugin. All right, extra plugin there with 60 plus extra features. So feel free to try that out and see which ones you like. I'm sure you'll find something with that many available. Otherwise, if you're looking at the recording later on, feel free to sign up for more webinars, education, Forex and CFD webinars. Check out the courses like Forex 101 or Zero to Hero or our analysis right here. As always, thanks for spending your time here. It was good to review it together. So far, looking like to me that the euro upside is most interesting at this point, in my 2 cents. So I think I'll be keeping an eye on that one. But I have some other ideas still floating around that I'll keep an eye on as well. We'll be back in any case, Netta, tomorrow with this webinar. I got a webinar as well. So plenty of things going on. Real-time trading ideas, I think, should be back with the regular schedule at 10 a.m. GMT time. Yes, it is. So you got 3 opportunities there tomorrow. And wish you all great trading. All right. See you soon. Cheers.